What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. We got some major stuff here today, something you might be pretty shocked about here. Also, we're giving away thousands of dollars here before the end of the year. And some of it going on here right before Thanksgiving. We're giving away money here every day actually through our kind of trivia question fun game we're doing here. So I'll give you a trivia question here in this video. So make sure to watch all the way to the end of this video. And if you can guess the answer, you could win money directly from me. Yeah, so stay tuned, watch this video, and you never know. I'll let you know here in a few minutes. Yeah, so first we'll start with this here. Yeah, the stock markets had a very, very good week. The S&P 500 gains on Friday as it heads for its best week since June. Yeah, best week since June here. You can see here the chart here of the S&P 500. 5-day chart here, very significant uptrend here when the new inflation data came out here. A massive jump. I think it went up 5% in one day from Wednesday to Thursday. And then again here, let me see here, Wednesday, Thursday, and Friday. The NASDAQ also up almost 2% on Friday alone. And this is because inflation readings came in lower than expected. And some people are saying that, well, you can see here, the stock market is poised for a significant year-end rally because, quote, inflation is basically over, says Wharton professor Jeremy Siegel. Here's what he says. Let me know what your thoughts are. Take a listen.
Professor Jeremy Siegel of the Wharton School. Professor, your reaction to this print on the CPI and the subsequent move in stocks?
Well, Scott, this is what we've been talking about, I think, for the last 3 months, that inflation is much lower than the Fed thinks. In fact, let me give you an interesting statistic, and follows up on what Josh was saying and what I have been saying for months, actually more than a year. If you put the actual home and rental price index in, not the one the Fed uses, which is very lagged, the actual one in today's index, you get negative core inflation. Negative core inflation. I mean, take a look at what core inflation on the shelter part was. Plus 0.8%. I mean, that's ridiculous. It's nowhere near that.
No way.
No way. I mean, that's the only, by the way, that's the only reason why core was positive. Not only is it zero, it's actually negative. Mm-hmm. And so if you put a negative number in, we're in negative inflation mode if the Fed uses the right statistics, not the faulty statistics that they've been using. So, you know, I mean, you're saying when should they pivot? Yesterday. I mean, yeah, they'll probably go now 50 and stop. They don't really need to even do that because everything is in the down mode. You know, I told you last June, I thought the danger was the Fed was getting too tight.
Right.
And now, you know, I think the data is showing, yeah, maybe that's true.
So if you had your way, what would they do next month in the December meeting?
Yeah, there's a lot of data coming through. I'm going to have another month of data to come through. But if the trends continue, I would stick with where we are. Now, I don't think they will. I think they're going to go to 50 and announce a pause. And that's what happened today. I mean, you know, the data today sort of confirmed that negative. If the data continues to go the way it's going, see no reason why it isn't. What's going to be to go 50 and announce a real pause.
Hey, what happens?
And that's why we have a 1,000-point rally today.
By the way, we get a CPI print the day before the Fed meeting in December. If that continues the trend of what we see today, does that potentially influence a 25 instead of a 50?
It could be. I mean, it could be in terms of, and what other real data comes in. We had a slight uptick in jobless claims. If that starts going up, if we see weakness in the November employment report that we're not expecting, that combined with another good CPI, that might put pressure on them even going less in their December meeting. But don't forget, the housing component in December will still be plus 0.7, plus 0.8, which is 40% of that index, and it'll continue to push up as the housing market goes down. And that's the nature of the statistics that they're using.
Professor, so what does this mean for stocks? Obviously, massive move today, relief in many respects. But what happens from here? Do we have the opportunity now for a significant end-of-year rally at minimum?
Yeah. I think we do, because I think more people that think about the fact that that inflation is basically over. And something I said 2 months ago, inflation is basically over, and the Fed doesn't have to get anywhere near as high. I mean, I was shocked at Powell's last news conference. Oh, I feel we have to be more hawkish than we were last September when all the data was pointing down. He's going to change his tune, I think, when they get to the real world data in their December meeting. But I think this does make for a good year-end rally.
So, couple things here. One, a lot of people, particularly people that play the stock market, invest in the stock market, watch the stock market, are seeing it go up. Investors are saying, hey, we think that inflation has topped. It's coming down now. It went from 8.2% down to 7.7% in 1 month. And then inflation is no longer on the rise. Now, whether or not this will continue, we'll have to see. But hopefully the worst is behind us. You heard what he had to say, and that inflation is now coming down. I mean, a 0.5% drop in 1 month is pretty significant. If that continues, we'll be on our way down pretty quickly. Okay. The next thing here is that the Fed, which has raised interest rates by 0.75% multiple months in a row here, is set to raise interest rates again in December. And remember that this affects pretty much everybody. Okay. This affects credit card interest rates, which are now nearing about 20% on average for the average credit card interest rate. So that means you're paying 20% of your balance in interest every single year, just solely in interest. So if you have a $10,000 balance, it's $2,000 in interest that you're paying every single year, just in interest. And the more they raise interest rates, the higher the interest rates on everything goes. Credit card interest rates, mortgage interest rates for new mortgages, or if you have a variable mortgage, if you're not locked in, or if you want to refinance, which is, most people don't even want to refinance now, or if you wanted to move, it makes it very difficult now because people don't even want to move now because, if they had a home in the 2, 3, 4% range, what are you going to do? Move now and get a home for 7% or higher? Your interest rate's double, which means it could be $1,000 more a month in interest alone. So yeah. And if you go to buy a new car or if you go to buy a used car, those interest rates are sky high as well. Because again, we've just seen interest rates just go to the moon here this year. So what he's saying there, what could happen is that we're expecting another interest rate hike in December. Hopefully, this data and what we're seeing here, interest rates have hopefully plateaued. We've now seen them start to come down. We've gone from 8.2%, which was the core inflation, down to 7.7. Remember that the Social Security raise and everybody on Social Security, SSI, SSDI, VA, RRB, survivors, got 8.7% because they go off a slightly different index, CPIW. So they go off a different index. So you got an 8.7% raise even though now inflation's at 7.7. So that's actually pretty good. You're going to get an 8.7% raise, and inflation is now at 7.7. And remember, that's locked in. That's a permanent raise that you'll get going forward every single year. And now inflation's going down actually at a pretty timely moment. So the raise got locked in, and now inflation's going down. That's actually kind of what we had hoped for, right? That's a good thing. So lock that Social Security raise in. It was the fourth highest raise ever, the highest in 41 or 42 years, depending on how you're looking at it, all the way back from 1981. And now inflation is starting to go down. Now the question here is, how much is it going to go down? Is it going to be very slow? Is it going to plateau? Is it going to go back up? Is it going to stay high for a long time? Is everybody getting excited over nothing? The other problem we're seeing here is that things like food is higher than the core inflation. We went over this here. I don't have the exact article here in front of me anymore, but I went over here in the last video or two that the average food inflation right now is about 13%. And the other problem here is that a lot of food is even higher than that. It was food at work and food at school over the last year was up 95%. So almost double of what it was a year ago. Shows you how expensive food is in certain industries. And things like eggs were up like 43%. And then you're also looking at, here's an article, food inflation could soar to 19% over the next year. So the cost of food is not going down. Cost of food not going down. And some of this has to do with Russia and Ukraine and all that grain not really being able to get out, or very little over there. And the other part of this is the cost of gas and diesel still staying really high, and everything having to be transported. So that's the other problem with this. And raising interest rates does not really affect the cost of food. You can raise interest rates all you want. It's not going to bring food costs down, right? A senior economist has warned that daunting food inflation could soar between 17 and 19% next year amid the worsening cost of living crisis. According to the Office for National Statistics, food inflation in the last 12 months to September hit 14.6%, significantly higher than the overall consumer price index inflation was. This is actually from the UK, where their inflation is 10.1%. James Wharton, chief economist at the Institute of Grocery Distribution, warned that in Parliament that the worst is yet to come. Yeah, and just to give you an idea here, UK inflation is at 10.1%. This is how their inflation has skyrocketed here as well. So ours is at 7.7%. The UK at 10.1% here. So inflation's actually a lot worse in a lot of other countries here as well, believe it or not. Yeah, so let me know your thoughts here. We're seeing inflation come down in some areas, but not so much in others. Yeah. So yeah, also we're giving away money here to, ironically, actually pay for people's turkeys. Yeah, so I originally wanted to send out frozen turkeys, and I realized it was too difficult and too expensive. And then I realized it would just be better to send people money. So I'm giving away $50 to a whole bunch of people here before Thanksgiving. Yeah, so the way it works here is that I'm reading trivia questions, or saying trivia questions here over the course of pretty much every single day up until Thanksgiving. And if you guess correctly, you'll be entered into the pool of people who have guessed correctly. And from there, I'm going to go after I read the questions here. A couple days afterwards, I'll come back and pick winners in the comment section. Okay. Be very careful. Don't fall for scammers. Okay. If you see somebody trying to impersonate me with a text message, a phone number, or anything like that, or WhatsApp or Telegram, I don't have anything like that. Okay. If I choose you as a winner, you'll know it's me because I will heart your comment and my name will be only It's Jimmy. Okay. And I'll have a check mark by my name. It'll only be It's Jimmy and I'll heart your comment. Okay. I'll tell you you're a winner and I won't ask you to call me or text me. I will ask you to get in contact with me, but it won't be through text messages. It'll be through email. Okay, but just be aware that just use common sense here. You'll know it's me. It'll say just It's Jimmy. I will heart your comment. I'm the only person that can heart your comment, and I'm going to give you money. I'm not going to ask you to invest or to contact me on Telegram or for you to send me money. I'm going to send you money. Yeah, so I'm going to do it through either PayPal, Venmo, or I can do Cash App as well. My brother has Cash App. I don't have it, but I've sent that to some people that way. Or if you don't have any one of those, then I can send you like a gift card or like a Visa card, like a prepaid debit card as well. Okay, so basically, if you know the answer to the trivia question, I'm doing trivia questions every day for a new set of winners. Answer down below. It's completely free to answer. If you guess correctly, then you're entered into the pool of people who have guessed correctly. And from there, I will have a random comment generator randomly pick a few people every day and to win. Okay, so that's how it's going to work. Not everybody wins, but a few people win here. Okay, so today's trivia question is, what brand of car has the Mayflower as its hood ornament? What brand of car has the Mayflower as its hood ornament, or had the Mayflower as its hood ornament? What brand of car had the Mayflower as its hood ornament? Maybe that's a better way to say it. Yeah, so if you think you know, if you have a guess, comment down below. If you guess correctly, you just may win money from me. I'm going to be giving away $50 to a whole bunch of people throughout this process up until Thanksgiving. I don't even know how many people it's going to end up being. We'll see. We'll see. And also, I'm going to be doing something like this as well for Christmas, the Christmas holidays. Yeah, we're going to be doing this all the way up until the end of the year. And who knows, maybe we'll just keep doing this next year as well. Because honestly, I have a lot of fun doing this. And it's just kind of our way of giving back to you guys as well. It's just kind of our way of saying, we love you guys. You're part of our family. And thanks for being a part of our family. You're part of our family just for watching. We call you guys our extended YouTube family. We've given away, I don't even know how many thousands of dollars here at this point. So yeah, so make sure you're subscribed to our YouTube channel. Just click the subscribe button, then the bell icon down below. It's completely free to do so. This way you won't miss out on new videos. New videos come out here every day on our YouTube channel at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And also thanks so much for liking and sharing these videos. So you can click this video here to watch my newest video next. And here is my video about new stimulus checks potentially coming out to millions of Americans. I think one of them's up to $3,000. So click on one of those videos next. Thanks for watching, guys, and I will see you in the next video.